Stocks climbed after a cooler than expected CPI report, and big banks beat expectations to kick off earnings season. How will all of this impact the Fed's ongoing fight to tackle inflation? The Biden administration unveils strict car emissions rules that could force EVs to the forefront of the auto industry. How achievable is this plan, and what does it mean for auto stocks? And commodity prices are on the rise. Could this be the early stages of a 10-year super cycle? On the Barron's Roundtable, my colleagues Andrew Bary, Carleton English, and Jack Hough. So, Carleton, this week we got slight improvements in some of the numbers we've been looking at. A little bit lower inflation, slightly higher jobless claims, and stocks were slightly pleased. Yeah, we saw the broader market climb just 0.2% over the last week. But to your point, slight improvement in inflation numbers and things like that. I mean, we're still seeing elevated inflation on the core measure by about 5.6%, much higher than the Fed wants to see. So none of the data that we've gotten over the last week, I think, changes the Fed's plan in terms of rate hiking. A lot of people are expecting that we're going to see another 25 basis point hike in May. Another indicator, we had bank earnings on Friday. They were pretty good. But what did they tell you about the economy and what the Fed might be looking at? Yeah, so the bank earnings themselves were good. We saw JP Morgan with a huge beat, huge increases in net interest income. But what we're seeing when the executives talk, they are preparing for some sort of economic slowdown. We are seeing loan growth, still growing, but at a slower pace. We already knew going into this earnings cycle that banks were starting to tighten their lending in anticipation of a recession coming. We're also seeing banks building up their reserves for anticipated credit losses coming. So the earnings beat, that is great news. I don't think we have to fear the health of the sector, but when you listen to what the executives are saying, they're saying, we have some tough times ahead. Yeah, the problem is that those are really backwards looking because all of those numbers came with mostly before SVB's collapse. And we're hearing that there's been real tightening in lending and that could hurt the economy. So what are you looking at next week for another leading indicator? Yeah, so next week we're going to be hearing from more banks. So I love that. But we'll be hearing more from the regional banks. And those were the banks that were really hurt in the upheaval that we saw at the end of March. So really getting a sense. Regionals. The regionals, yeah. Yes. So those are the banks where you really want to get a sense of their health. I mean, we all kind of knew that JP Morgan, Citi, and Wells would do well in this climate. The regionals are going to tell a much bigger story. Definitely. So, Andrew, the Biden administration just put out some proposed rules for electric vehicles. Do you think that's achievable?
This is part of a heavy-handed, extremely expensive campaign by the Biden administration to get Americans to buy electric vehicles, whether they want them or not. The latest rule could mean that electric vehicles could be 60% of new car sales by 2032. It's up from about 7% right now. And even right now, with all the subsidies for EVs, Americans aren't all that crazy about EVs. And I think that's going to be a problem for EV penetration going forward. People are worried about range. They're worried about the availability of charging stations. And it's everyone I know that has one is basically an affluent person for whom it's a second or third car. I don't think anybody who has a single car has actually an EV right now.
So what does this mean for auto stocks?
I don't think it's good news for auto stocks. I mean, GM and Ford stocks are weak. I think investors are concerned about whether they can make the transition to EVs from internal combustion engine cars and make anything like the kind of money they're making right now. I would, if you're looking for an auto stock now, I consider VW, the German automaker Volkswagen. Its stock trades pretty cheaply, especially relative to the value of its stake in Porsche. Another play on EVs is Freeport-McMoRan, the biggest copper producer in the world. Copper demand could rise very sharply in the next decade, and it's a good play on copper. Let's go to not only copper, but all commodities. Jack, you've been looking at an analyst who thinks that this could be the beginning of a nice season for commodities.
Andrew has commodity opinions. I am commodity confused. I never know. There's so many factors that affect the short-term supply and demand. Am I going long palladium? Do I short butter? Do I buy the naked butterfly future spread on tin? Is that even a thing? I don't know, but I did speak with John LaForge. He's the head of real asset strategy at Wells Fargo Investment Institute, and he has a very simple thesis on commodities. They tend to go through bull and bear super cycles that can last 10 years or longer. There have been 10 bullish super cycles since the American Revolution. John says we're in the sixth, and then we're in the seventh one now. It started in March 2020. Commodity prices broadly are up 80% since then. He says the average run is 250%, so there could be a lot longer to go. You don't need a hot economy or a hot stock market to get there. And they all mostly rise together, so you don't have to choose between butter and tin.
I like pork bellies, but before we go, real quick, how can investors get access?
You can buy an index. iShare, we don't have enough time for this whole name. iShares GSCI Commodity Dynamic Something Roll. The ticker is COMT. And there's an actively managed one, BlackRock Commodity Strategies, BICSX. The A shares are way too expensive. Do not buy them. Look for the institutional shares. Get in through a broker where you get a lower investment minimum.
Great advice. Thanks.